Welcome, everyone. Thank you for joining us today for our newest installment of our Meet the VCs webinar series, this time focused on food and agriculture. I'm Kirsten Leute of Osage University Partners, and I head up our university relations efforts here at OUP, and I'm going to be our moderator for our discussion today. We'll go to the next slide. And I'm really, really happy to be joined by Alex and Kyle here to talk about their funds, as well as trends in the ag tech area. I'm going to have each of them introduce ourselves, and then we'll go into a few slides of logistics and about OUP before we get into the main content. Alex, can I have you introduce yourself first?
Yeah, sure. Hi, everyone. Thanks for having me here. I'm a partner at Acre Venture Partners. I've been with Acre for about 10 years now. Um, at Acre, I cover a lot of our ag tech investing as well as supply chain, kind of middle of that food value chain. My background is originally starting in finance and then over time had moved on into the consumer world and have been investing in food for, over 10 years now.
Great. And we're so glad to have your expertise and experience here today. So, Kyle.
Hi, everyone. My name is Kyle Welborn. I'm a partner at Cultivation Capital. We're an early stage venture firm, about 350 million in assets under management. Typically invest early stage across a handful of industries, software tech, life sciences, geospatial, and agriculture. And I'm a partner in the ag tech team and excited to be here.
And we're so glad to have you as well, Kyle. And this webinar actually came about in part because Kyle sends out, is it yearly that you send out these trends report?
Yeah.
I saw it came across my desk and I thought, oh, this is perfect for a lot of our academic institutions that we work with. So we're really excited that we're going to be highlighting the data that you put together each year. So we'll be doing that in just a minute. We'll go to the next slide in the meantime, though, because we want to just talk about logistics before we dive into our discussion. A recording of this webinar will be available to all people who register for this webinar. We'll send this out to you afterwards. We'll provide a link to OUP's partner portal, which is available to our partner institutions where a recording and the slides will be available. But we also post the video on our YouTube channel as well. You can see there are QR codes here for you to get to either one of these. As I mentioned, the partner portal is only available to our partner institutions. We have a whole host of resources on this portal for those partner institutions, besides just our webinar recordings and webinar decks. So, you will be receiving, for those of you who registered, you will be receiving a follow-up email in the next week or so with that recording and the deck. We do have another webinar coming up at the end of this month, which is our annual Startup Financing Trends webinar, where we dive into kind of what's been happening with startup financings across the board, mostly in the US. But we also dive into university-specific data that we have from our own data on that. So be looking for that one at the end of this month, and then we're working on a few more coming up in the following months. We do encourage questions throughout the webinar. Please use the Q&A tool in the Zoom to submit to your questions. You'll find that usually on your toolbar down below. Please don't use the chat to submit your questions. The Q&A tool is much easier for me to follow. We did receive some questions ahead of time that we'll be getting to as well for our panelists. So if we go on to the next slide, a short intro on OUP. For those of you who don't know us, we're a venture capital fund that partners with academic institutions to invest in their startups, typically by exercising participation rights available through their licenses. For those of you who don't know what a participation right is the ability to invest in future rounds of a company on the same terms and conditions as other investors. We have recommended language around participation rights if you don't already have those in your license agreements. As a part of this partnership, the academic institutions share in a portion of our profits and receive programmatic support on technology transfer and academic startups. We're now on our fourth fund here at OUP. We've made investments in over 150 companies in all areas of deep sciences, with many of those companies now having successful exits. And the next slide just shows a smattering of the companies that we've invested in and their areas as well. We're very deep science focused as we're working with academic institutions and their IP licensed startups. If you ever have any questions about OUP and how we work, etc., just feel free to reach out to me. At the end of this slide deck, we're going to have contact information for myself and our two presenters as well. So you'll be able to contact them if you have any follow-up questions after this webinar that you think of. So we'll go to the next slide. This is just our agenda for the day. So Kyle's going to start us off with these ag tech trends that we've mentioned about. And then we're going to switch this up. Cultivation Capital, I think we'll be talking. We're going to have cultivation. Kyle, you talking first, right, about cultivation, and then we'll go to Alex, or are we going to do the other way around? Then we're going
That
to
works for me.
That's
okay.
fine.
All right, great. Well, so we'll have cultivation. Kyle talked about cultivation and their ag tech work first, and then we'll move on to Alex, and then we'll go into our Q&A. So please do, as they are talking, please do send your questions in, and I will be moderating that and ask the questions as we get to our Q&A portion. So with that, I will pass it off to Kyle to talk about the ag tech trends that he's put together.
Terrific. Thanks. So we can go to the next slide where we have a executive summary. So this presentation is going to cover two main topics. The first half is on investments into venture capital investments into ag tech startups, and then the second half is about the exit and M&A and IPO landscape for ag tech startups as well. So just starting kind of with a summary. When we look at 25 compared to 2024, we saw some stabilization in the landscape, about a 6.3% increase in capital invested, about a 5% decrease in the raw number of deals. Saw some sector divergences, which we'll talk about. And then saw a trend in terms of kind of a flight to scale, which we'll talk about, where a lot of the overall capital was going to a handful of smaller or a small number of later stage leaders in the space. And then, as I mentioned, we'll then kind of talk a little bit about the exit landscape. Saw a 32% increase in M&A activity in 2025 as compared to 2024, which we'll dive into. So next slide. So here's sort of the high level, what does the decade look like for ag tech venture capital? And the big numbers show continued growth in the dollars invested in ag tech startups. So over the decade, we've seen about a 19% compound annual growth rate. At about just over $1 billion in 2015 to over $6 billion last year. However, as you will see in the bar charts, 2021 and 2022 were outlier years where a tremendous amount of money was invested, and then that fell by over 50% starting in 2023. So those are very much outliers when you look at the overall. You could draw a very nice line that's pretty steady growth from 2015 to 2025, but you certainly see the bump there in terms of those outlier years. In terms of the number of deals, it's actually kind of settled in relatively stable at about 700 a year for a while. So while the dollars are up in terms of the number of ag tech startups getting funded, it's been relatively flat for quite a while now. And next slide. So this is the same data set, but actually, reviewed on a quarter by quarter basis, back to quarter one of 2021, and then the number of deals as well. And so, really after Q4 of 2022, which was part of those 2 years where we had the outlier results. We've seen, again, relatively stable amounts of quarterly funding, kind of ranging from the $1 to $2 billion a quarter range, and at roughly 170 or so deals a quarter has been the pretty consistent average since 2022. Next slide. So if we look a little bit in terms of, we break out that $6 billion invested in AgTech startups last year, and we break it into some of the categories. So what we've seen is sort of the alt protein and ingredients is the highest individual category with over $1 billion of the $6 billion invested. Kind of followed by the climate finance and kind of carbon initiative space, all the way down to the lowest one that we track would be the aquaculture space. So see a decent breadth and diversity of different types of companies getting funded. And on the next slide, we'll talk a little bit about how these categories have changed year over year. So here's the data where we look at it, all these different categories compared from 24 to 25. And so, the alt protein saw about a 10% increase. We saw a 30% jump last year in animal health and nutrition deals. We saw a drop in aquaculture and biological and crop inputs. So a big jump in the climate and fintech deals, big jump on the digital agronomy and farm management system, big jump in robotics last year, and a large jump in supply chain. One asterisk just to be careful about that we've seen when we track this, year over year over long periods of time. There's always, static and noise in these individual categories. So, I like to present, the data as it is, but there's next year we may see 60% increase in biological and crop inputs, and that wouldn't be surprising. So just because it happened over 1 year, I don't think there's enough to say, oh, this is an ongoing trend. But so we always see a lot of noise in that area. Next slide, please. So I talked a little bit about flight to scale. And so, a few slides back when we showed the decade of funding, and the obvious bumps in 2021 and 2022. I think one of the challenges that ag venture capitalists are working through, which is very much similar to venture capitalists in all industries. 2021 and 2022 were giant years across all sectors. So a lot of companies are sort of working through what does it mean when there was twice as much invested in a sector 4 years ago than there is today. And it's not uncommon for a startup to raise 24 to 36 months of runway in a round. And so we're starting to get to the point where a lot of those companies that raised capital in those big years kind of have to, hopefully are profitable and don't need any more cash. But if they're coming back to the market and they need another round, there's been a lot of stress in dealing with some of the companies that raised in those, call it bubble years. And so there's a lot of, I would say, kind of venture capitalists that making kind of defensive investments, trying to make sure that the companies that are driving a lot of value in previous funds, don't just go out of business or go away. A venture capital firm often raises a new fund every 4 or 5 years to be able to have new capital to continue to deploy. And so those 2021, 2022, marks are pretty important in terms of the overall success, investment success of those funds. So just wanted to highlight that there's those bubble years have created some tension in kind of the overall investment landscape. And I think as part of a result last year, which was 3 years from the 2022, big bubble year, there was a lot of flight to scale. So a lot of big rounds going to some companies that are trying to that hopefully are nearing the end of their need for venture capital and will start to get to revenue growth and everything else. But that there's that's having an impact, I think, on the earlier stage where it's probably a higher bar than it's been before to attract some of those seed and Series A rounds as we work through some of those challenges. Next slide. So now we'll transition a little bit to exits. So show what's the last decade of investment look like. Here's the last decade in terms of exit numbers. So last year we counted 54 AgTech startups that had an exit. All were through M&A last year. So that's about a 25% compound annual growth rate from 2015. Next slide. And so if we look at that data over the decade, this summarizes based on the calendar year, the number of venture-backed exits, how many were M&A, how many were IPO. We don't have the exit value number. It's just not a public number for about 85% of the M&A exits. So there's an average here showing what the average exit value was that year in terms of M&A. But just an important note, we don't know 85% of the value. So it's a smaller sample size, but we have what we have, and that's what we've got to work with. And then 22 IPO, so 247 of the exits over that decade were M&A deals, 22 were IPO. The unfortunate reality on the IPO side is many of those actually occurred during the SPAC era. So the 2021, 2022 era, where a lot of companies were getting out through these special acquisition vehicles. And those have mostly cratered. And so we've done a little bit of analysis to say, okay, if on the day of listing, if you added up all of the valuations of those 22 IPOs, it was a market cap of over $28 billion. When we've gone back and looked at where they're trading at today, they're down over 90%. So those values did not hold up. A number of them have gone into bankruptcy. Some of them have sold to strategics at sort of discounted pricing. So it's not surprising then that since that 22 year, there's since really the 2021 year where you can see 12 IPOs. There's only been 2 more since then on the chart. So that path is probably not something that we can look at unless something major changes as viable kind of moving forward. Next slide. So using those same categories that we track the startup investments in, we also mirror those to look at the number of where the exits occur. So of those nearly 270 M&A and IPO deals, as I mentioned, 247 of them were M&A. We have data on what the acquirer paid for 29 of those 247. And so using those 29 data points, you'll see the average M&A exit value for those different areas and the median M&A value. So across those 29 acquisitions, average value of 133 million, median exit value of 60 million. And you can kind of see it by category as well. Just one thing to note, is which I always find interesting. The most active category in terms of investments by venture capitalists was that alternative protein space. and that one had a $20 million M&A exit value. We saw a giant drop in biological and novel crop inputs, and that average exit value was 170 million. So the investment decisions are not always made by what historically has happened. You must have some belief in those are going to change, in your favor as future investments are made. We can go on the next slide. And yeah, so if we look at the number of exits, this is again just those 269 exits value or in terms of percentage of the different areas. So the most active area of exit was the digital agronomy and kind of farm management system. And at about 27% of all of the exits, supply chain, biologicals, and then aquaculture kind of bringing up the tail end there as well. So we can go on to the next slide. And this is just, I mentioned there were 29 acquisitions with pricing data since 2015, and these are the actual acquisitions. So when you guys get the slides, if you're interested in exactly what those are, or you think there might be undervalued or overvalued in a sector, this is the data. You can feel free to look at it yourself. So that is the prepared presentation I have. So appreciate that. I think I'm next just on cultivation capital. So we've as a firm invested in over 160 companies. 37 of them have been AgTech. Unique AgTech deals. So we've done 37 unique companies. So we've invested across animal health, digital ag. We've invested across novel crop inputs, novel seeds and genetics, and have really done a number of deals. So looking forward to questions and answering anything that people may have.
Thanks, Scott. I'm going to ask you one question before we move over to Alex to talk about Acre VC. Do you work a lot with academic institutions, and how do you usually kind of source your deals then from academic institutions?
We definitely like to work with academic institutions. So try to participate in various programs. Typically do the MRUN organization. I think the Midwest Research University Network, I think is what it stands for. So try to participate in various other things to find great ideas and great IP that's moving through.
Great, thanks. Alex, let's move on to Acre VC.
Yes. So as I mentioned before, Acre has been around for over 10 years now. We're currently investing out of our third fund. Our focus has always been across the whole food value chain. So starting with AgTech all the way down to the consumer and kind of the supply chain in between. We're an early stage investor. I mean, we typically come in pre-seed through Series B. We also like to lead. Given our expertise and narrow focus, we feel like we have a lot of value add just beyond the check. Our team is based here in Los Angeles. We've all been together since almost day one. So I think that definitely comes through in terms of establishing a lot of those networks and the learnings that we've had over the past 10 years, as well as given our background. So all of us come from very different parts of the industry, whether it's operators, entrepreneurs, venture, some of us, come from government as well. I mean, there's so many stakeholders in this industry. There's a lot of complexity. It is also very functionally different. And so, as Kyle mentioned, if you look at all those various categories that people are investing in, we're also present in all of those. And a lot of those are underpinned by a lot of different functional technologies. So, we're constantly looking at, I think deep tech's very, hot these days. I mean, that's something that I think covers a lot of the hardware, the physical world, software, a lot of the inputs, biologicals. And, our connection, I think, historically to universities has always been around working with some of these top programs that are really focused around food and ag, as well as, some of the principal investigators. And so trying to make those connections into the labs that are putting out a lot of great IP that can be commercialized. Actually, I wanted to bring up one example because, the reason Kyle and I talk a lot these days is because we're investors in a company called Ascribe, which came out of the Boyce Thompson Institute, which is part of Cornell. And that's a company that we worked with since the early days. We both co-led the seed round there. I think it's also a great example of how these things can go from the lab into a very commercial product. I think from day one, we kept really great connections with the university. Our board still has folks on it that were part of the investigative team. They're adding a lot of technical expertise to even the company today. And at the same time, I think Boyce Thompson and Cornell were really helpful in terms of providing the resources the company needed in those early days. So I feel like that handoff, it's not, as abrupt as it may seem. It's really nice when the university stays engaged and is also providing that IP transfer in a very smooth and market-friendly way, which makes it also easier for us as VC investors to step in. So I think some of those characteristics are really kind of key in terms of making these companies a success. It's a very delicate thing in the early days, and I think that's a really great example of something that's worked really well. So yeah, I'm happy to be here today and happy to answer any other questions.
So, Kyle, I'm curious about if you want to talk a little bit about your work on Ascribe then too, and working with other VC firms in general in the ag space. Is it common for ag space VCs to work together, or do people tend to go it more alone, or how does that usually work with the initial financings and later financings as well?
Yeah, I think it's very common to work together. If you look at the total amount of venture capital globally versus the total amount kind of going into agriculture, it's less than 2% of the total ag top or total venture capital top line. And so there's lots of room for folks to work together to get these companies funded. So most of them seem to have, we like working together. We like working across syndicates. Venture, you're typically not taking a controlling, stake in a startup, anyways, sort of by definition. So it's good to have other folks around the table, because, the companies will all need more money, and it's good to have it's good to be able to share that risk together and not have to do everything alone.
So I'm curious if do either firms sometimes do company builds, or what is it that you feel that each of your firms, when you're coming to the table, with potential investment in a company, besides the VC dollars, what is kind of your thesis of what you're bringing to the table, and that's going to be helpful to the company? And maybe Alex, I'll start with you.
Sure. I think where we're most helpful is on the commercial side. I think, making those connections in terms of getting the product to market. Also, just given our experience learnings in the space, I think we've seen kind of these motions in the past. So I think the early day company building is something we can be helpful with, whether it's on the hiring side, strategy, whatever the tools that the company needs. I would say like from a more kind of that studio approach, that's not where we typically get involved. I think it requires a little bit of a different setup, different resources. But part of, I think, the thing we like about the university connections and licensing the IP is that we're able to really step into those roles much more quickly. Otherwise, you're, I think, spending years and years on that research side of things that I think better belongs within the university space.
Same question to you.
Yeah, I think we've have a good group of folks and advisors that come out of the ag industry, and there's a lot of challenges in the ag economy, right now, from the farmer level all the way to the input manufacturer. And at the same time, there's a an important trend where farmers and consumers are asking for crop protection and crop inputs that have a smaller environmental footprint, have a beneficial environmental footprint. So there's just a lot of change happening all at once, and I think if you look at the R&D budgets of the big food and ag companies, they're not really growing, and so they are doing a lot of work to collaborate with startups, and where they have a lot of ideas. So yeah, it can be challenging when it's a difficult economic time, as the ag industry is facing, but it also creates opportunities where lots of folks are looking to collaborate and find things that work that farmers will buy, that can ultimately get commercialized in short order. So always excitement as well.
Yes, definitely. Well, we have a few questions that have come in from the audience right now. We have a number of questions from before, so I'm gonna start getting to all of those questions from the audience. So one of those is that Kyle, you'd mentioned that the bar had been raised for pre-seed and seed companies, and since the trend has been bigger on checks to later companies, can you give a few examples of what that bar movement has looked like actually, from those areas?
Yeah, it's yeah. I don't want to overgeneralize too much, but I would say the uh, the uh, from maybe the acquisition on down, the large ag companies are really looking to buy startups that are accretive on day one. And that was not always the case. There was a willingness, probably, in a previous era, to take a little bit more of a gamble and say, oh, with this IP plus our sales, marketing, and distribution, we can make this really profitable. But when bars go up, they go up, and so I think on the M&A side. Um, uh, and this then trickles everything down, but you're seeing companies really can't just have a product or have a product approved by a regulatory agency, or they have to have a product approved by with regulatory approval that has to have a solid profit margin. It has to work. It has to do all of these things before there's a lot of interest, I think, on the acquisition side. So as a result, entrepreneurs are being asked to do what entrepreneurs are always asked to do, and that's do more with less. They have to get further than anyone else has been able to get on less. And I think what that does at the seed level, and I'll speak for us, I think we're doing more diligence on sort of the go to market and how quickly can we start to generate revenue? What's the fastest path to cash from a revenue standpoint? Maybe more than we used to a few years ago, where it was like, oh, this is interesting. You've got some solid greenhouse or whatever data, and it's a big market. Let's just go, right. And I think because the M&A bar has moved up, the everything's rolled downhill, and now the seed bar has kind of gone up as well.
Great, thanks. Great answer. A question to both of you now, and because a lot of our audience is from the academic institutions, and so people are always wanting to know, like, when should they contact you about something? At what research point are you willing to engage with the university? Like, is there a TRL level that you're looking for? I imagine that some of this is just going to depend on the area within ag, but maybe you could talk a little bit about, when you potentially would be interested in something, considering it's coming out of an academic institution. And Alex, maybe I can start with you, and you could give some examples.
Sure. I would say, like, within food and ag, I mean, it's still a pretty small community, all things considered. I think we're all trying to be collaborative with each other. I mean, having success in this space, I think, is good for all of us, regardless of who's backing it. with that in mind, I think we're always happy to be thought, collaborators in terms of how to think about technologies, how to think about commercializing them. I think in terms of like more practical, like when do we invest? Um, I think at the point where we'd like to see a team that's been formed, and also for us, the ability to kind of evaluate the potential of the technology of the business. So it's probably like more of a post-transfer, the
Hmm.
corporation, the company has been formed, the team is in place, and you're showing some early results to kind of go out there and raise that first, pre-seed seed round. That's usually where we would like to, I think, engage in terms of those conversations. But in general, we're always open to providing kind of our thoughts on what that path could look like. Um, but I think that's usually a good moment in time for us.
Thanks, that's helpful. And just before I pass over to Kyle on the same question, so you are willing to look at companies that are pre-revenue and potentially pre-product then.
Yeah, I mean, I think it's kind of what you mentioned. It depends because there are different types of products
Mhm.
and, different approaches. A lot of the things that, for instance, the company that I mentioned earlier that Kyle and I are invested in, this is it's a biological, it's a biotech investment. And so, you're pre-revenue for years. And so in many ways, those milestones look very different than what you would look at if it was something that, you could easily go to market with tomorrow. Um, so I think for us, it's really a conversation around what are the relevant milestones. But yeah, it's oftentimes actually pre-revenue at that stage.
Great. All right, Kyle, same question to you.
Yeah, Alex nailed it. So I don't really have anything to add. Yeah, I think with with universities is just to highlight that. Yeah, it's often when there's a dedicated team with the company that it helps, and folks are going to bring that up into the world and turn it into something. It doesn't mean that we'll invest on day one, but we're certainly open to conversations early because it's nice to get to know folks over time and see how they're getting progress. They're often still getting grant funding or something at that point in time, and that we might get there might be some experimental data that comes out of an SBIR that would turn this into an interesting investment. So yeah.
Great. Thanks. So a question that's kind of general on technology transfer. So it sounds like you've obviously worked with tech transfer offices at academic institutions. Are there suggestions that you have for tech transfer offices on what you'd like to see potentially in the licenses that would be considering that, the ag tech space that would make licensing more efficient or easier for you? And this is a question we didn't have beforehand, but someone just wrote in. So I don't know if there's anything in particular that sticks out to you in your mind regarding the process.
I mean, I feel like a lot of the universities, academic institutions that have had success in the past in terms of funding for their technologies have kind of really developed standard approaches for all of this. And it makes it very seamless and easy for the VCs to get involved, or spend less on lawyer hours.
Yeah.
Um, I think that's probably the goal is like to have something that is standard across the board and is something that folks have seen before when they engage. Um, I mean, I'm sure there's a lot of particular terms we can discuss, but I think that's the general principle of it is, it feels like we shouldn't be reinventing the wheel on something like this.
Right. That's a great answer.
Yeah.
And another person asked about that the university has a small percentage. They're a stockholder in their company. Is that there any issue with that? I actually will just answer that off of my own experience, but I would love your input as well. But that's generally the custom is that the university, because the IP is generated from them, that the university has some sort of stake in the company as well. So. I don't think that's, it's not a problem for us. I don't think it's generally a problem for the investors when that's the case. So,
It's
okay,
great to have the alignment.
great. Yes, it is. That's very true. Um, so, so I'm going to ask about some questions about some particular industries within food and agriculture now. So, this person asks about that many food products and ingredients have very tight margins. How does this play into the opportunities that you will consider? Do you still look at things that have very tight margins, or do you kind of are those the areas that you are not as interested in, or how do you deal with those areas? And Kyle, maybe I'll go to you first on this one.
Sure. Yeah, I mean, it's tight margins are always difficult. They always, it makes it less appealing. I think, for all parties, right? It's less appealing for acquirer. It's less appealing, throughout. So,
Right.
if it's a technology that can improve somebody's margin, it's often, more interesting. So, yeah. I mean, for any startup, in order to sell something, you have to share margin with the store, with the manufacturer, up and down the chain. So it's always better to start with more to share, so that they're going to want to actually sell it. We do occasionally get some startups where it's not uncommon, maybe in ag, to like have some technology that's going to make a farm retailer sell less. They're like, we can use less of this pesticide, right? If you have this, and there's nothing wrong with reducing the pesticide load, going out into the world, but it does make the business model a little tricky to figure out how can you um, incentivize someone to sell something that's going to reduce their income. So it still needs to have those that alignment some way or another, because at the end of the day, someone's going to have to sell it, and nobody sells anything for free.
Yep, true. Alex, anything you want to add there?
Yeah, I mean, I think low margins are a feature of the food industry as a whole. And so that's something that, of course, you have to take into consideration. I also think scale is a feature. And so in some ways, I think whatever maybe you lose in absolute margin, you make up in volume. Um, and I think that's usually the trade-off that I think people evaluate, is, if even if you're getting lower margins, can you just be on more acres, or can you be in more places? I mean, it's such a global market as well. I think that makes it very exciting. But yeah, it makes the startup situation a lot more precarious, because unlike, let's say, SaaS, where you can be wrong by 10% of margin and be okay, um, this industry doesn't really afford you that luxury.
Yeah,
So
right. Great. All right. Next area we're going to talk about is robotics. Do you have interest in robotics in the ag space? And if so, do you have a wish list for that? Alex, I'll start with you.
we definitely have an interest, and we've made a number of investments in the space. We particularly see a need within a lot of the specialty high value crops. I mean, we were based in California. You see a lot of the labor issues here. They're not getting any better. And so for us to really address a lot of the needs that farmers have, I think robotics definitely has to play a part. Um, and it's also, I think, from a kind of a sustainability standpoint, one of the key theses of our fund is really around climate. And we feel like autonomy, robotics can really play a part in that, in terms of allowing for higher value products to be used on farm, maybe in smaller amounts, kind of what Kyle was just mentioning. Like, you can be a lot more precise about your applications. And thus you can really utilize some of these newer chemistries or biologicals that are coming to market. So we feel like there's a lot of really great things happening around autonomy. And yeah, that's a space we're really excited about.
Fantastic. Glad to hear about that. Kyle, robotics.
Yeah, it's a very exciting space. I think it's a tricky space, as well. I mean, robots are expensive, and require manufacturing. So you know back to the business model of any startup, you have to figure out, unlike just taking a cool piece of IP, with hopefully, that for novel crop input that you can kind of licensed to a big player in some way, and you actually have to deliver physical robots to a customer, and they have to be safe, and they so it's an area that we're really interested in. I think from just like a deal flow standpoint, we don't have a ton of investments in it yet and hope to have more in the future. But I do think something's happened over the last, I don't know, 12 months that just makes me feel like I'm starting to see like real robotic successes in terms of like units sold and like unit
Mhm.
economics. It's not just sort of like we're going to build, the ultimate completely autonomous tractor. We'll have our first one ready in 5 years, and we have no idea how much it's going to cost. We're not, now really starting to see companies like, oh, we've sold hundreds of units, and it's working, and we've got this model. So I think it's exciting to see kind of maybe the first crop of winners in some of this space as well. And I think that we're on the cusp of that.
Great. Before I get more to the kind of life sciences side of food and agriculture, I've got a question from someone else about digital agriculture. Thoughts and trends on that particular space. I don't really know much about it. So, Kyle, do you want to comment on first of all, maybe what digital agriculture is, but then your thoughts on that area?
Yeah, well, yeah, I mean, as you saw in the data, it's the area with the highest number of exits, but it's also probably the area with the highest number of like distressed exits and acquihires
Mm,
as well. So, I mean, sometimes a raw number is just a raw number. There's always nuance underneath. Um, we used to joke kind of internally, the digital ag life cycle was someone who said, okay, I'm going to build something for and sell it directly to a farmer, and then it was hard to sell to the farmer. And they say, okay, I'm going to sell it direct to the input company. And then the input company wouldn't pay very much. So they said, okay, I'm going to go to the insurance company. And then the insurance companies wouldn't pay very much. And then finally they say, I'm just going to sell it to the government. And if I can sell it to the Defense Department, maybe I can make this work if there's some sort of dual use strategies. Um, but I would just say it's remarkably hard to sell either a software product or a sensor direct to the farm. It's just that there just really hasn't, no one's cracked that model yet. I think in my view, and so it seems like if you look at some of the companies that Planet Labs or some others that have been successful, they're often like ag plus, so they'll sell something to farmers or some software tool or some hardware to farmers, but there will be other markets, often the government or other things that are willing to help get some of that in place over time, and kind of give the company the ability over to maybe start with 60% of the revenues or 70% of the revenues coming from the government, but over time, hopefully that goes down to 20% and 80% is sort of commercial users. So I mean, there's lots of opportunities to use software and to measure things or to use satellite data to make improved efficiencies in agriculture. And I hope more of them get picked up. It's just been a particularly, I think, hard area to nail the business model. Is what we've seen.
Alex, do you want to add anything on digital?
Yeah, I think digital has had a hard time with adoption, especially paying adoption, as Kyle
Hmm.
mentioned. I think that's an area where the actions haven't been as clear. Like, what should the farmer do? And I think if you just provide farmers with data and pictures, it doesn't really move the needle. It has to be
Hmm.
something that is really creating ROI for them. And I feel like that's been a really tough nut to crack for a lot of these companies. Um, so yeah, I think finding that product market fit is still like a key consideration. Um, but that being said, I think what I'm excited about, and I know we haven't mentioned AI enough on this call yet, but I think AI tools are really great at dealing with a lot of unstructured data and complexity. And I think ag probably has the most complexity and unstructured data you can think of between all the various parties and the the complex value chains. And so I think there's something there in terms of maybe being able to harness all that in a way that gives newer, more interesting ways to run the businesses. Um, and I would love to find companies that actually focus on that. I think there's some really interesting potential there on that data layer. So hopefully we'll find that.
That's good to know that that's of interest. All right. So everyone out there, work with your ag scientists and their data, and what's coming out of that. So I'm going to switch quickly to genetically modified plants. Curious about the current landscape on that and what it is that you're still looking at there as far as opportunities. So, Alex.
Yeah, I mean, I think if you do have one of the biggest winners ever within any industry, I think it's kind of the GM adoption, right? And so I think it gives you kind of a view as to what the potential within agriculture is if things do get adopted. Like that scale is staggering. And for us, I think we're invested in companies that are trying to advance those technologies. I mean, at this point, they're somewhat old. I mean, it's been, 30, 40 years. Um, and you're also seeing a lot of the incumbents, I think, really focused on that. I mean, that is the main business in terms of margin creation within agricultural inputs. And I see a lot of exciting new startups joining this space. I think there's a conversation around maybe what it looks like in terms of capital needs and how vertically integrated you want to be, but I mean, it's one of the most core areas of agriculture, I think, is on the genetic side, and it can really address a lot of the issues that we talk about, whether it's resource efficiency on the kind of upstream side or all the way down to the consumer in terms of nutrition. So yeah, extremely excited about that part of it.
And I think this person was particularly interested in disease resistance themselves. So,
Yeah, I mean, if you can eliminate a lot of the chemicals we use because the
yeah.
plants do a better job themselves, I mean, that's a huge breakthrough. And I feel like regulatory is also coming around on a lot of this new technology. So things are aligning. I think it's just a question of, getting to products that can be used in the field.
Yeah, I think you know that if we had to sort of break apart genetically modified versus sort of precision breeding, or the difference between inserting a foreign gene into a plant, or overexpressing a native gene, or knocking out a native gene, the whether right or wrong, there seems to be more customers, consumer acceptance on sort of precision breeding than inserting totally foreign DNA from another organism into a new crop. And in certain geographies, you can get much faster regulatory if you if you fall on that precision breeding side than if you're truly doing what historically would be considered genetic modification. But we're also really big believers in that. I think it's there's just a lot of fascinating stuff happening there. I mean, most of the true biotech crops, the initial patents that were commercialized were started in the late 90s, and a lot of that IP is now expired. And so when you look at a actual where do the big ag companies make a lot of money, it was those protected genetic traits. And then we're seeing Corteva has announced they're splitting into two companies, a crop input company and a seed company, and the seed company is going to be bigger. And so we're seeing this kind of over and over again, where the bigger quote unquote value creation is on the genetic side, and there's a huge need for new genetic tools, or new genetic solutions that are going to give those companies margin. So I do think they're going to have to do a build or buy at a lot of these companies to figure out what the future of their pipelines look like. And I think the other exciting piece is historically those. I think the genetics was really only in a handful of very, very large seed companies. but with some of the drop in terms of the cost of doing gene editing, we're seeing kind of tier two and tier three seed companies finally being able to potentially partner with a startup, license something, and get it into them. And it's not all owned by two or three companies at the very top. So it kind of hopefully creates a wider base where, yeah, we're going to see less inputs needed because everything from corn and soybeans to watermelon and tomatoes now have the ability to bring some of this technology in.
So there are actually a couple questions that have come in that are kind of follow-ups to comments that both of you have made. So one of those is actually directly related, I think, to Kyle, to what you were just talking about, is that, the universities come out with a lot of technology, some of which are appropriate to build a startup around, but some of which are really like you're not going to build a full startup around it. And are the portfolio companies that you have invested in then, are they looking for those additional opportunities, and how are you helping them source those, or how are they finding those? If that is the case, that they are looking to maybe bring something on that's, complementary to what it is that they are doing. And Kyle, I'll start with you.
Yeah, that's a really good question, a really hard question. I mean, I think for any startup, it's often focus, 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 focus. So it can be difficult to, then at an early stage, pull in more IP.
Yeah.
Sometimes it's about trying
Right.
to bring what you got in forward. With that said, it often makes sense. So I don't know that I have the right answer. It's a little bit still feeling around for what works, but I have a colleague in Argentina who says there's a saying that two broke guys don't make a rich one, and so sometimes it can be difficult to put together two pieces of IP that don't have a seed round and make it work. So I don't have a great answer.
Yeah.
It's important, but it's also important to focus and figure out how to get these things moving.
Absolutely. Absolutely. All right. A quick follow-up one to you, question to you, Alex, because we were talking about data before.
Sure.
Are the data sets themselves of interest, or just the ways to utilize them, or does it just kind of depend on the situation, when you're looking at these data sets?
I mean, I think it always depends. I think it goes back to if you can show that you have some proprietary data that you can clean and process in a unique way to then give insights for actionable takeaways for the underlying user. It doesn't need to be the farmer. It could be maybe the agronomist. It could be the retailer, whoever it is. It could be the company. I think that's the big idea. I mean, in many ways, like I think a lot of the digital ideas that come to ag have already been executed on in other industries. So we're not really I think creating anything new here. I think it's just simply trying to see if there's also similar applications that you would see in maybe more fast-moving industries. And so that's kind of where I think a lot of this comes from. So I think looking to maybe what works somewhere else and trying to do it in ag.
Thanks. Well, so we are just about at the top of the hour. For this last minute, there are two things I'd like to ask each of you. One is, how should people contact you? We will send out the deck that has your emails in it. But how do you like to hear from companies and information on that? And then the second thing is there anything that we didn't talk about yet that you just wanted to make sure that people knew about you? So, Kyle, I'll start with you.
I think we covered lots of things, so I don't have anything to add. But emails always best for me, and I do my best to get back to them all. But that would be great.
Great. Thank you. Alex.
Same here. Yeah, email is really good. I would say, this is a very ag-focused conversation. That being said, we've licensed technologies on like novel fiber that's used within, consumer applications or things that have to do with the microbiome. And so for us, it's really that whole value chain. And so we were looking for technologies across the board that somehow touch on food. It could even be like novel materials, packaging, things like that. So it is a much broader, I think, segment for us than simply just on the agricultural side.
Okay. Terrific. Well, if there were any questions that were unanswered, I'm sorry we didn't get quite to all of them. Please do feel free to follow up with Alex and Kyle. I'm sure they'd enjoy hearing from you. Thank you to our audience for being here today and asking all the questions you did. And thank you, of course, most to Kyle and Alex for sharing their expertise and wisdom today and opening themselves up to potential contacts as well from the academic institutions and their startup companies. So really enjoyed the conversation and appreciate you being here.